most people probably don't know that 30% of, or approximately 30% of the cost of an AI data center is in cooling systems.
Oh, yeah.
Like, who would know that, right? I mean,
Yeah.
they studied it. So who's the leader in cooling systems? Vertiv. So, Vertiv's the top holding. So that's the type of analysis we do.
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Hello, and welcome to the Bull of Wall Street. We're super thrilled to have our guest, Adam Patti, join us. Adam, welcome.
Hey, thanks for having me. Been a long time. It's good to see you.
It's good seeing you. And I hope to see you in person, one of your events. You know, I noticed your wife is doing one, I think in New Orleans next December, not this December. My wife and I might go to that one, but and I was chatting with Sarah, producer here. You and I have known each other, I think, for it's got to be more than 10 years, right?
Long time. And but time flies when you're having fun, right?
It flies. And so you have been on quite a journey. Oh. You are the CEO now of VistaShares. And prior to that, tell us about your journey, how you got here and what you're doing and what you're excited about with VistaShares.
Sure. Well, so I've been in the ETF market since way back, 01, actually, believe it or not. So very, very early. I was working at Time Warner, running marketing for some of the divisions and doing a bunch of other things. And one of the things I did was run a business called Fortune Indexes, where we created a Fortune 500 index and we licensed it to State Street back in 2000 and created the Triple F, which was is a core equity.
I remember Triple F.
Yeah, so that was way back, and that was my first kind of learning experience in the ETF market, and I just loved it. I loved the ETFs, and I didn't have a background in ETFs. I was a investment banker for a while before that, but fast forward, I ended up starting a company called IndexIQ back in 2006. And we were the 18th ETF issuer in the country. We were only the second ETF issuer to actually create our own indexes behind WisdomTree. At that point, everybody was licensing indexes in and then just.
Yeah, I remember.
So that was an interesting journey. We came up with a concept called hedge-fund-replication to try to bring institutional class investment strategies into an ETF wrapper. Long story short, built that up, sold that to New York Life back in 2015. I was at New York Life for 3 years, helping to build out their global ETF platform. And then I was out and I was had a non-compete, and I was desperate to try to get back in the industry that I love. And here I am. So we had the opportunity to do it, and in a special way, I think. So I'm really excited.
Well, that's awesome. I mean, I feel like you're like one of the pioneers, because like when I think of those original ETFs, it was 2001. I mean, this goes back to like QQQ and SPY and GLD, or I mean, like there weren't a lot of ETFs back then. I started the business late 90s, and those were kind of like, I don't know about these spiders.
Yeah, it was a crazy time. In fact, we used a lawyer named Kathleen Moriarty, who unfortunately passed away, but she was the spider lady. And she was the lawyer on the spider and on the SPY, and she would always wear a spider brooch. She was something else, that lady, really smart and a nice person. So yeah, it was early. It was a lot of fun. I mean, in contrast, when we launched the FFF, we got $100 million in seed capital. So that doesn't happen anymore.
No. That's wild.
Yeah.
And then IndexIQ, that was pretty big. I mean, you had a lot of traction there. I feel like you had a lot of folks and of course New York Life coming in and buying. I mean, that's big. That's big. So that's congratulations on that. That was cool.
Thank you. Yeah, thank you. It was very fortunate. Yeah, we were early. We had really good products. We had a really good growth rate, and New York Life was a good partner. So it was a very fortunate experience. Excellent.
And so now you're like back in the hot seat with VistaShares, excited. Non-compete is over, and I was looking at some of your tickers, and I love your tickers, by the way, because you got like OMA, which is like Omaha, I guess, something like that with Buffett. You got Wild, you got POW, and then it looks like you got a Drunken Miller and a Bill Ackman type ETF. So, and then your AI one is the AI one's like the main one, right?
That was our first. So we launched that back in December, almost a year ago. So it's been out there a year. It's been an incredible product. It's been the top performer in the AI space. And, so we just constructed it very differently. And just to back up how VistaShares got started. So, I wanted to get back in the industry, but just didn't want to, do just something. I wanted to do something what I thought might be special. So I had the really good fortune of meeting this guy, John McNeil. And John is the former president of Tesla. He's the former COO of Lyft. He's on the board of General Motors. He's vice chairman of their autonomous vehicle division. He's just a brilliant, very successful guy. And he's an AI expert. And so he was actually on CNBC talking, I think it was to Joe Kernan, and they were talking about AI. And Joe's like, well, how? And this is going back 2 years now.
Yeah.
So to John, he's like, well, how do I get exposure to this? And John's like, well, there's got to be an ETF for that. He went and started looking at the ETFs, and no surprise, a lot of the ETFs out there call themselves an AI product, but you look under the hood and it's not really AI companies. So that was why he wanted to get into the industry. And then we got together and, co-founded VistaShares together.
That's awesome. That's awesome. And then you have another person that is on your board, right? That actually comes from one of the other AI companies too, right?
Yeah. So AIS, so what we do, all of our products are active to a rules-based process. So we have an investment committee sitting over. So AIS, which is, our AI product.
Yeah.
So on the investment committee is John McNeil. Then we have Sunny Madra. Sunny is the president of a company called Grok, GROQ.
Oh, yeah. That's the one.
Yeah, one of the leaders in the world in inference. He's a luminary in the AI space. Then we have Professor Robert Whitelaw, who is the former dean of NYU Stern School of Business, and myself. And so what we're trying to do is we're trying to bring practitioners to the table. People who actually understand the AI space. Or tomorrow we're launching POW, or Electrification. So we're bringing to the space who understand the industry, not just Wall Street analysts doing, running numbers, but people who really understand the companies to develop our portfolios.
And that's interesting. You and I chatted about this before. I think you have an approach, and I may be getting this term wrong, but it was like a bill of lading type. Like what goes into making the AI. So it's really kind of an AI infrastructure. Like, what do you need to build this? And those are the companies that you start with. And so I think like there's a Korean company that's like your number one holding. Tell us more about that.
So this was John's brainchild. So John, when he decided that he wanted to get in the ETF market, and he was, trying to figure out a way to create a better AI product, and the same process will work for Electrification, for our products launching tomorrow, but it's a bill of materials process. So basically, what we do is, so when Meta or Amazon says they're investing $100 billion in AI, what they're actually investing in is building out data centers and semiconductors. Mm-hmm. So what we do is we analyze the supply chain. We map out the entire supply chain for data centers and for semiconductors. Then what we do is we overlay the bill of materials on top of that, because we want to know how important each segment of the supply chain is in terms of revenue and profits. So once we've done that, then we identify the companies in each segment. So just for an example, most people probably don't know that 30% or approximately 30% of the cost of an AI data center is in cooling systems.
Oh, yeah.
Like, who would know that, right? I mean, we studied it. So who's the leader in cooling systems? Vertiv. So, Vertiv's the top holding. So that's the type of analysis we do. So we create a rules-based process to create this core portfolio of companies that are actually doing the work and collecting the profits from this AI boom. So, for the next 3 to 5 years, AI is all about infrastructure. After that, consumer-facing applications will make money probably down the road. But until there's enough computing power to generate the type of applications that people find valuable, all the money's going into infrastructure. So that's what AIS focuses on. And POW tomorrow is focused. So if AIS is kind of the intelligence infrastructure, the data centers and the semiconductors, what POW is all about the electrical infrastructure.
To make sure that there's energy and you can support it. And so would you own some of these names? Would you own some of these names that would be like Oklo or Vistra or Constellation or like nuclear names?
Yes, we have nuclear names in the portfolio. So if you kind of look at the portfolio, I'm just pulling up the fact sheet now, so it's generation, it's transmission and distribution. And actually the money to be made right now is on the transmission and distribution side. We have a whole investment case that we put together that actually breaks down the gross margins and where the profits are flowing. So, the United States doesn't have an energy problem. We have a power problem. We can generate the energy. We can't get it anywhere. That's the issue. So yeah, we do have the nuclear names, and those are important. But it's the distribution and transmission names and the kind of the energy technology that is, we believe, the place you want to play for most of your exposure.
So this is really interesting, Adam. So you're looking at all these different energy companies and like it all comes down to supporting the huge demand for AI and including, like cooling the AI. So the HVAC companies, where do you see that going like 5, 10, 15 years? Because I've read about like a large AI data center is going to be like the equivalent of New York City. And we want to build a bunch of these. So like, where are we going to get the power to do this?
Exactly. That's the gating issue right now. So, you can build as many data centers as you want. What people are trying to do on the data center side, when they build the data center, many times they're actually trying to create their own power generation right on the campus because the grid simply can't the needs, which is why a company like GE Vernova has become so important. Because what's interesting is that you can build the generation facilities. They're usually natural gas driven, so we have plenty of natural gas. We don't have enough turbines. So GE Vernova is the company that builds the turbines. So they're actually a holding in AIS, and they're also going to be a holding in POW. It's the only overlap holding, actually, because they play in a couple different areas on the infrastructure side. But that's the problem, right? The grid hasn't been upgraded in most areas, for like 40 years. So you can forget the data center power that's required. Just fixing the grid for humans.
Just normal. That makes sense.
Yeah. So
just normal. And I know out here in California, the issues have been PG&E and like, we're worried about a fire, so we're going to shut people's power down because they haven't upgraded it, they haven't insulated or anything like that. And so then there are fires, right? So there's things that are related to that. So like this, I feel like this is probably an area where the administration can say, we need to invest somehow and the companies, and maybe we take ownership in the companies. I don't know what that ends up looking like, but
I agree. It's a problem. It's a national security risk as well. You got to get the grid. You got to, protect it from cyber attacks. I mean, there's a lot to it. So it's in the next big growth phase, in addition to this core AI infrastructure. But they go together. You almost have to have both exposures if you believe in AI for the future.
Yeah.
5 or 10 years, you were saying, so for us, at least on the AI infrastructure side, so, next 3 to 5 years minimum, it's all going to be about building out those data centers and semiconductors. Then at some point, again, the consumer facing applications will become more important. That's why Microsoft is investing, or Amazon or Meta, they're all investing hundreds and hundreds of billions because they believe one day they will create applications that create enough value for their customers where they can make money. But right now it's all about CapEx, and that's going into these quasi-industrial companies that, you mentioned SK Hynix or a South Korean. Yeah,
Yeah.
I mean, these are really important companies that most investors don't have exposure to in their portfolios. So it's just a very different exposure with very fast growth rates and very fat margins.
It's super fascinating. And then, of course, everyone's wondering, like, when does it end, right? Because I feel like, in history, historically speaking, sometimes we overbuild and then we're like, oh, we overbuild. But like, I feel like this is still could keep going for like at least 2 to 3, maybe 4 more years. What are your guys saying about
We
that?
agree. We think we're early. I mean, I know
Wow.
it's been a run, but it's early. I mean, look at the growth rates. I was talking to somebody today about Taiwan Semiconductor, right? I mean,
Yeah.
it's one of our top holdings in AIS. And, people say, well, it's trading at a 29, PE and, S&P's at, 27 or whatever it may be. But,
Yeah.
they just came out with earnings. They were over 40% on top and bottom lines.
Wow.
Ahead of expectations. So, in the dot-com boom, it was all about eyeballs, right? That was that was a bubble. How many
Yeah.
eyeballs did he get?
Yeah.
Now it's
They
actually
weren't making any money. Most of them weren't making any money and they were just burning through cash, but like you got the eyeballs.
yeah, exactly. So we believe it's about the picks and shovels, right? It's the infrastructure players. I mean, look, think about like fiber optic cable, Corning.
Mm-hmm.
Corning is a leader in fiber optic cable for AI data centers, boring old Corning.
Yeah.
These are the kind of companies, and they're doing extremely well. Their profit margins are actually expanding in many cases, and they're driving a lot of profits. So, these are the areas that we're trying to choose.
Sure.
We're not going to be everything to everybody. We have our, bill of materials process. We filed a patent on it. We're bringing real expertise to the table. We just brought a new advisor to the table to sit on our investment committee, in addition to the other ones I mentioned. This guy, Justin Lopas. He's the COO and co-founder of a company called Base Power. They're one of the leaders in energy technology. He was a lead engineer at SpaceX. He was the head of manufacture at Anduril. Those are the type of people we're bringing to the table because they understand the companies in the space better than a typical analyst would.
Interesting. That's super fascinating. Have you guys talked about, I know we own a little bit of quantum exposure. Most of it is indirect exposure, the big companies, Alphabet, Microsoft, they're investing into quantum, but like there are some of these smaller ones that they're actually gaining some traction. They're actually growing the revenues. And one of the things that's talked about is like, well, if you can use quantum with AI together, then you may not need as much energy. You're still going to need a lot, but maybe you don't need, as many gigawatts as current plans would say. Have you guys looked at that or talked about that at all, or still early for you? Or
yeah, I mean, we look at it. It's on our agenda. We talk about the companies, but it's a different theme. So we don't play in that theme. It's something that we could look at in the future, but it's a very exciting area. I mean, for sure. I mean, so what John McNeil talks about, and this is what really attracted me to work with him. So he talks about supercycles. So, this is the first time in history when there's more than one supercycle happening at one time.
Oh, yeah.
And what a supercycle is a kind of long-term technology-driven disruptive trend that changes the way or can change the way people live and work. The last supercycle was the internet. Now is one. Mm-hmm. Now we've got AI, we've got electrification, we've got robotics, we've got biotech, maybe even space. So, and then quantum fits in there as well. So there's a lot of changes going on, which is exciting and scary. And, we'll see how it all plays out.
Well, and it's interesting too, like the war that's going on with Russia, Ukraine. This is like the first time I think we've seen a geopolitical conflict where there's a lot of drones and like we're not having the spending is not in like lots of, jet fighters and things that there's drones that cost, I don't know, $20,000 a pop or 10,000, which is still a lot for a drone, but like compared to a tank and it can take out a tank. So like, that's interesting too. What we can do and how much better these things have gotten. But then, yeah, right. I mean, the national security side of this is real too, right? I mean, it feels a little bit like a race, what we're doing, versus China. Feels kind of like Russia and the US and this Sputnik and all of that.
I agree. Yeah, I call it a global arms race. It's not only companies, but it's countries. And, everyone feels they need to win, which they probably do, because something is going to change once AI reaches a certain level of intelligence. And, I guess everybody wants to be first, which again is scary and exciting at the same time. But, we'll have to see how it plays out. But in the meantime, the money's going to infrastructure. So
it is. Well, and software is there, and we just don't, but we don't know exactly how things are going to be. I was at a conference, this was a few years back, and I asked the economist, well-known economist, I'm not going to mention his name, but I this was when AI was still kind of new and fresh, and it was before ChatGPT had their moment. And I said, what's this going to do to jobs? And he said something interesting. He said, back when they were building the railroad, they had all these railroad workers, and they would ask, how many fingers you had on your hand. If you lost a finger, like, oh, your experience building the railroad. And he talked about how, we went from railroad to, from horse and buggy to cars. And like in every instance, you've had a lot of displacement, but then there's been new things. There's been new areas. And so I guess that's kind of, what we don't exactly know what those new areas are going to be. But I guess, we're learning about like prompt engineers and other people that would work to make sure that the quality is there with the training data.
Yeah.
And so, it's exciting.
It is. It's a lot of disruption, for sure. I just read something. I'm going to get this wrong, but Tencent, the big company, the Chinese company, I think they came out with yesterday that 20% of their new code or 25% of their new code is being generated through AI.
Oh,
so
wow.
Taking away coders.
Yeah.
I might have gotten the number a little bit wrong, but it was a big number. And I was like, wow, that's interesting.
Makes me think about those people that are that are really power coders.
Mm-hmm.
And they could probably do 10 times, maybe 100 times more than what they were able to do before. So that's interesting too, right? I mean, just the productivity boom and maybe it's not across the board, but I know that like even some of the industrial companies, 3M and Caterpillar and a lot of the, boring companies, Coca-Cola, like a lot of them are starting to look at, how do we use AI for safety? How do we use it for manufacturing? How do we use it for inventory control? And I mean, so there's a lot of applications, and then you can throw quantum in there too if there's a component where you can, pair that with AI. So that's super fascinating.
Yeah. I mean, companies big and small need to be looking at AI to improve efficiencies. I mean, we're doing it. We're a small little company, and we're already starting to try to figure out how to use some tools to just make ourselves grow faster.
Yeah, that's fascinating. So tell me more about your ETF lineup. So you said they're actively managed. It's a little bit different than most ETFs that are just kind of like, some of them are, I guess, semi-active, but there's an index, but they're not real active. But then I feel like what you're doing is maybe a little bit more active than some of the others. Tell me a little bit more about the methodology, how that works. And
yeah. So we have three families of products. One is our growth equity, which is our supercycle ETFs, which is AIS and POW.
Yeah.
And then we have our options income strategies. Then we have what we call tactical alpha. So they all operate differently, but they all operate in one similar way, which is that they're all rules-based processes for the core of the portfolio. But then we have our investment committee overseeing them. And the job of the investment committee is to identify risks and opportunities. So even with a product like AIS, we're not waking up in the morning and say, oh, Palantir's down 10%, let's buy it. That's not what we do.
Yeah.
We're looking for major risks and opportunities. So if we notice a company in the portfolio has a new competitor with a better technology and they're losing pipeline, that's the knowledge we're bringing to the table to get out of that position before something happens to the security in terms of going down or whatever. But so we're not cowboys. We're very data driven. On our options income side, we have 4 products right now. They're all what we call Target 15. So one is OMAH, which is invest like Buffett with 15% income. We have ACKY, which is invest like Ackman with the same income.
Oh, yeah.
Then we have DRKY, which is Druckenmiller with the income. And then we have QUSA, which is our quality tilted core equity portfolio. So what we do there is, and I can explain all the portfolios, but on the options side, again, we're not cowboys. What we're trying to do is provide stable income every month. So the target is 15% annually, which is 1.25% per month. We don't want 126 or 124. We want exactly 125. If we make more than 125, we're rolling it back in the NAV. So these are all positioned kind of as core equity solutions. The Omaha OMAH, which is our flagship, it's Berkshire B in the portfolio plus the top 20 holdings of Berkshire Hathaway. And we rebalance that quarterly. And so it's basically the Buffett portfolio, but with the income over. And then we do the same thing for Ackman, Druckenmiller, and then we have our quality income.
And then you have Wild in there, which I love that. I love it. We don't have any advisors that would use something like that, but it's creative and I like kind of what you're doing with those things.
Yeah, I mean, this one, I love this product. It's made for traders. It's not a long-term hold type product. It's what I was trying to do, and I like to solve problems for the industry. And
sure,
it's a very different product than the rest of what we have and will be doing.
Yeah.
But, a lot of retail investors are buying those single stock, double levered ETFs. Those scare me.
Yeah.
So I don't like those personally. I mean, they work for others. God bless them.
Sure.
But so I said, well, maybe there's a way to do it in a more institutional way. So we went out and talked to institutional trading desks. What do you do to get high beta exposure? And we came up, it was very consistent that they create concentrated baskets of high beta names. They have different systematic processes to choose those names. And that's what we've done. So what we do with this every month is we rebalance it's 5 stocks, rotated monthly, levered twice. So it's
interesting.
Levered. So, and what we do to identify those 5 names is we look at asset flows. So we're actually looking at all the single stock levered ETFs out there, and we're monitoring their flows to see which ones are growing the fastest and which ones are the largest. And based on that, we have a scoring system that every month we rotate into the five that are attracting the most assets.
Yeah.
So it's like the, animal spirits. It's the.
Oh, that's right. Wild animal spirits. I love it.
It's where the money's going. So product's been doing great. I mean, performance wise, it's been spectacular. It's, we're not out there selling it to RAs because it's not a RA product. Though some RAs are saying, whoa, that's really cool. I mean, I'll buy it. Okay, but I like to focus more on the core portfolio construction tools.
Well, I feel like you and I are in agreement. At the end of the day, like we really need to make sure that advisors are educated, and we need to make sure that the end clients are educated. I mean, we talk about that so much, and especially, because not all products are created equal. Some of them are out there, like you said, that there's just too much risk, and if people don't know whether it's something that's using leverage or whether maybe it's an alternative investment that's not as liquid, but then there's inherent leverage there too, right? It's different type, but like there's, you're getting private credit, you might be getting 12%. Well, where is the 12% coming from? And like, what are the risks of not getting your money or liquidity? So yeah, we just try to always talk to people about education and just being aware of the behavioral finance biases that are out there.
Yeah, it's and you know what? A lot of people don't, and it's scary, to be honest. I tell everyone, look under the hood, and to that, let me tell you what keeps me up at night. My big fear right now, and I talk to advisors all day long, just like you do.
Yeah.
A lot of advisors are using the S&P 500 and the Qs as they're in their core holdings, right?
Yeah.
Which makes sense. But not most. many investors, and certainly even some advisors, don't even realize that 40 to 45% of the S&P 500 is in the top 10 holdings. The Qs is in about 45 or even higher percent in the top 10 holdings. And they're almost the same top 10 holdings.
Yeah.
So the over-concentration risk is real. And we see a drawdown. Everyone's going to be very shocked. So I've been telling people just, diversify, get into different exposures, keep it in large cap equity if that's what you want, but keep, diversify into other exposures. Own
some value, own some quality, own different types of names. We have the same conversation with our advisors, and I know they have it with their clients too. So I run some multifactor strategies for the Wealth Consulting Group, and they're actively managed, but they're like, we're going to own some value. We're going to own some low volatility names. We're going to own some momentum, some trend, different types of trend. Not all trend is momentum. Some of it is just, your dividend payers, very stable trend. Some of it is trend reversal, which is more like value. But yeah, we try to really emphasize the diversification, also position sizing, like you said. I mean, people that own the SPY or they own QQQ, and if they own both of them and they think, well, this is really a diversified portfolio. Well, I mean, if the top 10 holdings all drop significantly, that's a big chunk.
Yeah.
Big chunk of the portfolio.
Yeah. And those names have been running for so long. I mean, how much longer can they run? But I agree. So that's, diversification is key. I agree 100%. And, and that's why we like our options income ETFs. If you look at their portfolios, they're just very different. They're very different from one another, and they're very different from big indexes. And then you get the 15% income, which is a nice, robust income stream. Now, of course, when you have options income, that your portfolio is not going to keep up in a bull market because you have your options, right? So people, it's, call it 75% of the upside, 85% of the downside. That's kind of your band of, what you should expect versus the same exact portfolio without the options.
Sure. That's interesting. And those have actually become a lot more popular. I feel like there's more providers out there, but I wonder if it has something to do with just baby boomers in general. They like option income. They're liking more option income, and there's some downside protection to those too, right? So, interesting.
Yeah.
So have you guys thought about doing alternative type ETFs? I know you did that a little bit with IndexIQ. Have you thought about what's going on? I mean, it's pretty wild to see gold, hitting all-time highs while the stocks are, and then crypto's up there too.
Oh, God. Yeah. I mean, we've got a lot in the pipeline. Some of it hasn't been approved yet, so I can't speak about it.
Oh,
but
yeah.
We've got some interesting crypto type products, very different. See, anything we do is going to be very different. We want to fill space. We're not going to do Me Too products. So, we spend a lot of time in the product development process to find things that we think add value to a portfolio. And then we go out and talk to advisors to see what they think. And if they like it, we'll file for it. So, there's going to be some good innovative product coming out, as we move forward.
Well, this has been fantastic. I don't know if I have any other questions for you. Do you have any other things you wanted to mention?
No, I just
what you're doing.
No, I think we covered it. Keep an eye on us. We're a small company. We've been very fortunate to grow fast. We're almost 800 million in assets after.
Oh, wow. Congratulations.
Yeah. I mean, last December, where I think I saw you at Stephanie's event.
Yeah.
We had just launched AIS with 500,000 in assets. So
wow.
We're almost just under 800 million now. And, very fortunate to be able to grow so quickly, and, hopefully just keep it going. And, we're trying to, do it in the right way, not bring a lot of products, but bring products that we have high conviction behind.
Yeah. Well, congratulations to all your success and many more well wishes for you guys. That's awesome. And I'm sure we're going to hear a lot more about what you're doing, over time.
everybody do. Come and dance on our floor. Dance on our floor. Take a step that is new.